You're in the Business Insurance Zone with me, Steve Savant, national financial columnist and financial color commentator. This week on The Biz, the Asset Protection Series. And on today's show, life insurance in a hostile environment with national columnist and attorney at law, Ike Devji.
When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Well, welcome everyone to the Business Insurance Zone. I'm Steve Savant, your host, and we're broadcasting live to a nationwide audience of financial advisors right here in Fountain Hills, Arizona, home of America's largest fountain. And with us today, day 5, attorney and author, Ike Devji. Ike, I got to tell you, you are opening up my mind. If you have not seen Monday, Tuesday, Wednesday show, especially Wednesday and Thursday show, you may want to do this for your own practice, right? For your own sake, much less the sake of some of your high-end clients. We've been talking all this week about asset protection, and finally we get to talk about something I really love, which is using life insurance in tandem with asset protection. Now, Ike, when we're talking about some of the things, I am blown away by the amount of money that is really being spent in defense, legal defense of corporations and individuals. And I think you were telling me something like there were like 70,000 lawsuits. I mean, is that a month or a week?
We have in this country, Steve, the most litigious litigation system in the world. We have up to 70,000 lawsuits filed per day.
Per day?
In the United States.
Unbelievable.
And as an attorney, I'll tell you that I find it difficult to believe that substantially all of those have significant merit. Many of them are a fishing expedition. Where somebody is looking to scare someone else into writing a check. And as you said, the defense costs are staggering. In the previous shows, you and I have discussed some specific examples where clients had to pay up to $250,000 out of pocket in defense fees. The average cost of defending a frivolous lawsuit that settles in this country is up to about $91,000. That's just the legal fees you spend to get to the point where you get to write the next check for the settlement.
Unbelievable. Well, when I think about life insurance in a hostile environment that you've just described, and that it sounds pretty hostile to me, I'm looking at some of the states, because everybody's state's different, and you're going to need to go out to your state to find out what your state uses for creditor proof. And life insurance, I think, and you'll correct me if I'm wrong, is either one of the only left sanctuaries that, and depends upon what state you're in, for creditor proof. I mean, is that true? Is that pretty much still the last sanctuary? It
is one of the last sanctuaries, Steve. More than half the states have statutory creditor protection for the cash value of life insurance, and in many cases the proceeds of life insurance as well. And what that really means is that it's there by law. It's not because I, as an attorney, or any other trust witch doctors created some magic plan that created it. It's there in black and white in the laws of the state. In some cases, in some states, it's even bankruptcy remote. And in many states, in more than half the states, and I'll give you just a couple as examples, Arizona, Texas, New Mexico, Hawaii, Florida, Illinois, I can go on and on, all of those states protect the cash value of life insurance to an unlimited dollar amount. Pretty extraordinary, considering that none of those states, for instance, have homestead, or most of those states don't have homestead that's equivalently protective.
Okay, I always thought there were limitations on life insurance cash values and annuities per state. Is it unlimited in some of these states that we've mentioned?
In some of these states, it's absolutely unlimited. It is, for instance, I know that we don't want to focus on any specific state, but in many of these states, the cash values of both life insurance and annuities are creditor protected to a, quote, unlimited dollar amount.
Can qualified plans can talk like that? I mean, honestly, could you actually, I don't think qualified plans fall under that jurisdiction, do?
Qualified plans do have statutory protection as well, in terms of they're protected because the law said so. So they share that similarity, but there are significant limits. So for instance, in states like California, the courts decide how much of that you actually need for, quote, your reasonable living expenses. So even if they don't take the principal, they might take the distributions. So in some cases, life insurance is even better protected than a qualified plan.
Well, when I consider that this could be a huge, huge area to go into, because we were just talking off air before we did today's filming. Really, when you think about it, having creditor proof and putting as much as you want in for the unlimited states, remember every state's different, I'm thinking about several contracts in my mind that are pretty liquid, 95 to 100% liquid. I mean, at the end of year one, I mean, that's huge. So you're not worried about, you know, liquidity issues, that's off the table. And all of a sudden I have access to park major majorities. I mean, I think you told me there's 13 trillion in money market accounts in the United States sitting on the sidelines. And all that is exposed, all of it's liquid, and it's actually in the crosshairs of attorneys.
You're absolutely correct. There is a greater concentration of cash in the United States than at any time in our history. And it is because of the perceived instability in both the securities market and the real estate market. Successful people, of course, have money in both, but they're holding back more than ever. So as advisors, whether you're an attorney or a CPA or the insurance advisors, the experts that watch your show regularly, we all have to look at other options to help these folks shelter these things in the most productive way.
Well, I'm looking at it. Do you think that high-end consumers or a huge affluent, maybe upper middle class affluency and wealthy Americans are looking now, do they get that life insurance is a great place to park this, especially depending on their state's credit? Do you think that's true?
I think they are starting to realize that. They like the tax benefits that are available in some policy structures. They like the fact that if you have money in the bank and you die, if you're lucky, you get back what you put in there. But if you had money in an insurance policy and you passed, you're going to get a multiple back. They like the fact that the law says that this is protected.
Wow, when we talk about creditor proof, this is a great thing for life insurance. When we come back from the break, we're going to continue our conversation on life insurance in a hostile environment, all part of our asset protection, all this series with Ike. And don't forget to enroll in IULUniversity.com.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Well, welcome back to the Business Insurance Zone. I'm Steve Savant with Ike Devji. And remember, you can order today's support materials at our website, thebiz.tv. And just a heads up, before moving forward with any of the ideas on the show, always consult your attorney and tax advisor, and if you're FINRA licensed, your broker-dealer compliance officer. We're talking about life insurance in a hostile environment, part of the asset protection strategy. Finally, at the end of the week, we get to talk about some of the cool things I like. I want to know who the prospects are, especially when we're talking about, we have several contracts that are 95 to 100% whole at the end of the first year in single deposits, which I think is huge. And not only that, but multiple death benefits, like multiple death benefit off every dollar we spend. And by the way, I just noticed that second to die, shockingly, just a little sidebar here, right now preferreds at age 65, and I mean super preferreds, I should say, to be more specific, are sitting somewhere around 5.5 to 6 to 1 for every dollar dropped. I mean, the leverage is huge. Ike, tell me, who are we looking for? Prospects. I want to start looking for clients and prospects who could use this kind of liquidity in a life insurance and fit it into their protection scheme, depending upon, again, what your each state's creditor limitations are.
Well, that's a great question. I think we start at the most basic level with capacity. Does this person have some additional insurable capacity, or should they have some more life insurance is one issue. The second issue is, does this person have substantial personal or professional liability in terms of, for instance, a physician or somebody who is a builder or a developer or a contractor or owns some other business that has some inherent risk. Another group that we see who has been increasingly open to and excited by this kind of a strategy is the number of people that are among the large number of baby boomers that are moving towards selling the successful business that they have worked on building for some multiple of 10 years, 10, 20, 30 years in many cases. When we have that person who may have been successful, may have a 6 or 7 figure income, that person is now going to get, for the first time, a larger check at the sale of their business than they've ever had before. And that creates an asset protection exposure. It creates an exposure in general from everybody else, and of course from the buyer themselves, right? If you buy a company and it doesn't run the way you thought, what's the first thing you're going to do? You're going to call your lawyer, and you're going to see if there's some act, omission, disclosure that you can use to recoup some of those funds. All of these people have great exposures and are looking for solutions to help securitize that money.
Now, we've seen people starting to, I mean, the public at large is starting to adopt this platform of using life insurance in a single deposit for asset protection. And again, state by state, it'll tell you what the limitations are. But there are some states with no limitation. Those states are, wow, I think I want to do business in those states. Because now we're talking about liquidity features inside these contracts that, again, can make the client almost whole at the end of year one. Some of them even do so. I want to talk about when you approach a client. I mean, I'm just trying to think of a client. He still has to go through underwriting, right? I mean, it's life insurance.
Absolutely.
You know, so he's still got to go through underwriting. You're approaching him saying, I'm selling you life insurance because it is part of an asset protection strategy, and in your state, one of those states, there's no limitation to how much cash is in here. This may be a great place to park. What's their first response? I mean, because you're thinking, well, I normally keep it in the bank. I normally keep it in money market funds.
That's a great question, and that is the first response, is, well, I have that money in the bank. And people keep cash, Steve, as you and I know, for only 2 reasons, really: opportunity and emergency. So number one, it requires an advisor who understands the explicit detail of the policy and can provide clients access to policies that are fully liquid with no lagging cash value or surrender penalties, number one. Number two, if you look at the comparative financial benefit between money in the bank, earning 30 basis points for most people right now, versus what you can get in an insurance policy, as you said, the power, the wealth multiplying power of having the death benefit, the statutory creditor protection, and if there's any growth, it's tax-free, as opposed to the insult of the 1099 you got for the 30 basis points from the bank. It makes sense to a lot of people. We also have a lot of people who have subjective fears about having too much cash in the bank, about the solvency of the bank, about FDIC limits. And many of the people who are going to be qualified for this have 6 or 7 figures in cash in the bank, in some cases more, that is exposed to all of those things. And this is a great way to hedge risk and use the law to do it. Well,
I would like to just for a second think of like, hey, what if I didn't? The death benefit's a great multiplier, no doubt about it. And the ability for that death benefit to go tax-free in so many scenarios is great. But if I'm just sitting there strictly on the liability, the living benefit of life insurance, just that living benefit, I'm transferring money into this life insurance. I have to go through medical underwriting. Let's say everything goes great with that. Now I'm putting that money that normally would have maybe went to CDs and money markets, which, by the way, are totally exposed, right, to liability.
Absolutely. They're exposed not only to liability, but if you have an estate tax exposure, they're exposed to that as well. So if we have a high net worth individual that we're looking at, not only are we afraid of a lawsuit, we're afraid of them losing half of it to the government.
Well, when I think about all the things that we've done this week, I want you to go out on www.brokersalliance.com, which is one of our sites, and then head for our own show site at thebiz.tv. Look at all these shows Monday through Friday. It is worth watching. And really, we've named several things this week that can make great door openers to get through gatekeepers and some of our affluent clients. Remember, you can watch all these shows by going out to our website at thebiz.tv. Just sign up on the homepage, and that's the Buzz on the Biz for today. You've been in the zone, the Business Insurance Zone.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.